Alright, hello, welcome. A couple seconds early, doesn't matter. My name's Frank, this is no more paper trading, trying to build a community. It doesn't sell anything. Just want to bring traders together that want to become traders for the sake of trading. At this point, I don't have any viewers, but so this serves as my own video log as I try to become a better trader. Alright, let's start with looking at the news, see if there's any news on deck. There's nothing today. In fact, this week is pretty bare. As well as earnings. Not a lot of earnings this week. Friday is a holiday. I'm very confused by... So Nike, tomorrow after close. General Mills Wednesday. Could be some bad news. We'll see. But I'm very confused by the market holiday schedule for futures. It doesn't really make much sense. I don't know what I'll do to understand it. It says Saturday. Futures open for Monday. But then they also open on Monday, or Sunday for Monday. But yet Friday it's closed. I don't get it at all. We'll see. Other than that, Tuesday we have nothing. Oh, JOLTS, consumer confidence. Wednesday. I hate how it doesn't show the whole week. Wednesday. ADP employment. Some employment information coming out this week. And then Thursday, non-farm payrolls. Ooh, that's a big one. Guess I should have known that. I don't keep good track of all the news unless it's upcoming soon. And I know I have to skip it. Alright, let's check the headlines, see what's going on. Let's check the lies. AI jitters. They're doing everything they can to pretend it's just jitters. But that's all. Couldn't possibly be. Wasted billions. Wasted trillions. And we get this weird article. South Korea to invest 1.2 trillion in... Is this... So I saw a video title the other day saying... It was one of those attention-grabbing titles trying to get you to click. I'm sure it was probably something mundane. But the title was something like South Korea's betting on one thing to change its future. Because South Korea is on a huge decline. They have been for some time. And of course, there's never one single thing. I doubt the country's betting on one single thing. They might have made some terrible choices over the years, but they're not that dumb. Maybe this is that one thing. If it is, then they are dumb. 2/3 of its GDP, a new chip building hub. AI data centers over several years. Ooh, that's going to go over real well soon. Speed is the only path to survival. Okay, first of all, you're 2 or 3 years behind. And have you really done your research? I feel like making a comment on it. Let's read this terrible article. What's good for the U.S. economy now may not be good for stocks. Really? You think so? U.S. economic data has been solid, led by continued job gains and strong consumer spending while sentiment is ticking up. What are you talking about? Consumer spending is at an all-time low. Or is that consumer sentiment? They can't get there. They don't know. What you do is if you're an evil prick, or a group of evil pricks, you change how things are measured so you can tell everybody the sky is red when it's not. So you can pretend everything's rosy. Now, I'm not saying everything's terrible. But there's no good way to measure how bad things are in this country. I swear I just saw an article that consumer spending's at a 50-year low. Let me check. Man, I really wish Google gets a good competitor, but DuckDuckGo is not it. Okay, consumer sentiment. So it's not being represented in consumer spending? Something's off. How can you have consumer sentiment at a 50-year low? People are the most pessimistic they've ever been, but yet they're still spending? I don't get this article. Strong consumer spending. I don't know. I don't have the time to look into it further. All I know is it's playing games. And I think it's a lie. I don't know. I don't think people are spending more. I think they're, okay, so they're spending the same, but it seems like more because everything costs more. And somehow they found a way to measure that and make it seem like it's good. What? Okay, when everyone is greedy, it's just a whole bunch of dumb stuff here. The amount of people who think this bubble market is going higher and the number of thumbs up they get when they say it will go back up always does is a contrarian indicator as the market makes the most people wrong. I mean, that's not true. Listen, I'm bearish, but The market is not fully a contrarian indicator. The simple fact that the market goes up more than it goes down is proof of that. Yeah, money printing, I agree with that. Now the bond market says you have reached your credit limit. Well, bond market's changed a bit since then. Yeah, I'm seeing a lot of this. This guy says, I pretty much got out of the market about a week and a half ago, and I'm sleeping better. It's been said a million times you can't time the market, but your points are valid. I took my 35% profit and cashed out for a while. Yeah. A contrarian view for Fed rate cuts. Payrolls will weaken, inflation will plunge, and Kevin Warsh was largely performative in his hawkishness.
Look at Supertrend.
I mean, I was saying stuff in kind of the same, along the same lines. I was saying, look, the president wants cuts. For whatever reason, he's being held by the balls by the billionaire class to keep this bubble afloat for as long as possible. Maybe forever. Maybe they think forever. Don't ever assume they have a plan. Maybe they're just trying to cash out as much as possible. But the president wouldn't have put Kevin Warsh in his place, in his position, if he didn't have something on him, if he didn't have power over him. It's just bad politics. You're not going to go, hey, I just trust you. No, he didn't have anything over Powell, and he still tried to bust his balls with a bunch of fake stuff. So what do you think he's going to do to a person he puts in? He's going to have dirt on him. He's going to make him do his bidding. The Fed has always been political. Don't pretend like it hasn't. Wall Street overwhelmingly expects the Federal Reserve to hike rates later this year, but a few contrarians still insist the opposite will happen. According to CME's FedWatch tool, investors have priced in 77% odds that the central bank will lift the benchmark rate by a quarter point or more by the end of the year. That's as the U.S.-Israeli war on Iran sent oil prices soaring, while the recent ceasefire hasn't seen an equivalent dive in costs. Yeah, imagine that. Because the inflation wasn't caused by the war. The war just brought it out more. The inflation's been here for a long time. The AI boom has created a chip shortage, which is all manufactured. All these chips are sitting in warehouses. They're promised. They're not being used. Very, very few of them are actually being used. It's a way to pool money and hike prices, again, for consumers. Meanwhile, GDP was revised higher. The job market has also firmed up, and the tsunami of cash tech giants are raising signals monetary policy isn't that restrictive. And for good measure, Kevin Warsh's first press briefing as Fed chairman last week stunned Wall Street with his hawkishness, clinching the case for tightening. This is from the 27th. On Monday, analysts at Bank of America predicted the Fed would increase rates 3 times this year, as policymakers take more decisive action to rein in inflation after 5 years of seeing it above their 2% target. Yeah, after 5 years of pretending it's at 2%. On the other side of the argument, it's crazy. For how many years the Fed was saying we're pretty good, even though we're close to 2. Well, 2% is still terrible. You don't want any. What did I hear recently? Some politician said the only way we're going to beat inflation is if incomes keep up with it. That is the dumbest thing I've ever heard. No, not ever heard. It's dumb. We're supposed to live in a free market. How can you make sure wages stay elevated and in pace with inflation? You can't. And all these huge companies love it because they're charging more for everything. But they're not paying more. If you give someone a pay cut or refuse them a raise, there's going to be all sorts of problems. But if you simply let inflation run rampant, charge more for everything, still give people raises, but for real, it's a pay cut. Well, you just pulled the wool over their eyes. In contrast to market pricing, we continue to see data and developments that's pointing toward an economy that, rather than rate hikes, is more likely to require rate cuts. Andrew Hollenhurst, U.S. Economics, Citi Research. Why? Is he going to mention why he sees on oil, for example, the market has rapidly swung from shortage to surplus, removing the key upside risk to inflation. So energy is not the only input for inflation. Inflation was going up when oil was cheap. Does not matter. And even though first quarter GDP growth came in stronger than initial estimates, Hollenhorst pointed out real customer spending was revised down to a multi-year low. Wait a minute. Didn't I just read an article above that said consumer spending is at an all-time high? This is what I mean. It's just, they're screwing with us. The AI boom also obscured uneven gains. Excluding investments in computers, electronics, and intellectual property, growth would have been just 0.5%. Right. I mean, they're just outright saying it. The Fed is a slave to the markets. I mean, thought I just had is we're seeing the beginning of the death throes of the Fed, and I hope it comes true. Many people smarter than me have said for a long time that the Fed just will never work. You have a constant battle of opposing forces that you just can't make them all square. You can't keep employment up. You can't keep printing money and keep inflation down. You can't raise rates and keep our country's debt in control. It's not going to end well. Yeah, leave rates low. Walsh is a strong Republican. If he raises rates and the stock market has a bad correction. See, I think too many people put too much stock in the average person's outlook on the market. Most people don't really care. If you tell them come election time, hey, look how low the market is, that's because of the Republicans, they're going to be like, so what? I'm living fine. You know, or at least they did something about inflation. The prices are actually coming down for once. That's really what people, the average voter, cares about. They're not going to say, oh, great, my investment's paid off. No, the average schmuck is just hoping and wishing that they can go to the grocery store without having to open a new credit card. But it is a good point that this guy makes. He's probably going to leave them untouched. I speculated on that. Donald, aka Captain Hazelwood. Who's that? Whatever.
Look at Supertrend.
Warsh is merely talking tough while he's in the background trying to change how we look at inflation. Once he changes the data, he will immediately declare that he has beaten inflation and start lowering interest rates. That's a good point too. Because he is getting rid of the dot plot. He's trying to anyway. Part of that could be he can take better instructions from his masters. And nobody can point to, hey, you said how many times now? Look at your dot plot. Nobody can say that. So right now, if the market crashes, we'll have, I would say, little to no depression. We would just, I think a lot of the tech companies would have some serious problems, which nobody cares. We might actually improve. We might move towards real manufacturing. But if this bubble continues, and they do everything they can to continue it, I'd say by 2028 we are looking at a recession. But that's the way it always goes. That's the way humans are. It's just how it is. And all in all, it's still 10 times better than any utopian communist bullshit. I will take greed and capitalism any day. All right, let's take a look at charts. We are sitting real close to the 50 SMA. This will be the battleground for today, is what I'm thinking. We have overlapping profiles. So this is definitely where value has been placed. And we will range back and forth between here until one side decides. That would be a decent trade once we do break out of this range, which it looked like on Friday we were. But if you look inside the in the charts more, you could see on Friday it was not a steady decline. That dip down on Friday was not natural. It was a blip, I guess you would call it. I guess I would see that as a rejection. If I had been paying attention last night and doing homework instead of playing games with my brother, I would have known. I would have seen this. I would have saw that Thursday night and Friday morning, that we had consolidated down in this new area somewhat. And once we came up from it, not once in the morning, but twice throughout the day, that we would run up and test 50 SMA. Add it to my list of shoulda, coulda, woulda. That is pretty clear. Now that we sit at the 50 SMA, we will see. Which I don't have it marked on this chart, but it's right about here. I expect a choppy day, but we'll see. I've been wrong very often recently, which is why you have to constantly update your plan, your theory, your goal. All right, key areas. I think ahead of us we have this previous initial balance high, which is from all the way back Tuesday. After this initial drop, this initial large drop here. Where the hell is it? Right here in the overnight. Came back and tested this level. So expect resistance at 74.90-ish. Value area, high value. Why is it labeled like that? I spend most of my day fixing stuff. Alright, if we head lower, I should actually get rid of this initial balance low. But one of the only key support areas I see lower is Friday's close and this initial balance high from Friday, which has yet to be tested after Friday. So we'll see. All right, that's all I have for today. Good luck. Goodbye.